And right now we dipped below 43. So we're just like flattening around at 43. And last time when we dropped below 43, it was back in December 2021. So right here, and that is one of the early signs that we were in a bear market, but degens or all the altcoins YouTubers out there, they were too, I don't know, too hyped to accept the truth, but that's okay. We are using technical analysis to give us a picture where Bitcoin possibly is at right now. So last time we were flattening around this line a little bit before actually losing that for good. So losing that for weeks, that was the confirmation that we have. And then the rest is history. So we entered the prolonged bear market in 2022. And the same thing is kind of playing out right here. So we lost 43. That was back in 3rd of November 2025. So this is one of the signs that this is a bear market, because like people on Twitter still don't want to accept that. And because like according to the cycle that we had last time, even if we lost that, we still had this like little pump. So that was a kind of a flag right here, and this what I call a relief rally. So this is one of the reasons. So first of all, is because of the hours line losing 43, that magical number. The second reason is the Ichimoku cloud. We have to bring up the Ichimoku cloud yet again, because it is an amazing indicator, because it is a leading indicator to tell us where the market is going to. And one thing about the Ichimoku cloud, we are just like trading inside this cloud. So in other words, this is the support and resistance that we are monitoring very closely. And last time when we were trading inside this cloud, we essentially spent 3 months. So if the same applies to the this cycle that we have, then possibly we have this relief rally all the way till mid-February. So again, like history doesn't often repeat, but it often rhymes. Because if we even zoom out to all the way back to 2018, like we lost that Ichimoku cloud. And if the we didn't spend much time staying inside this cloud, but like if we lost that, that is a confirmation of bear market, and maybe even the third stage of bear market, I would say. So right now we are essentially, okay, this is the first stage. We are following exactly how the 4-year cycle predicted. So we topped on 6th of October. And then right now, this is actually the second stage of bear market before losing the span B and go to lower place. Okay, general rule of thumb, how low are we going? We need to pull out the 200-week right now, because like if we lose the blue line right here, we're going straight to the 200-week. So right now is around like hovering around 57K, but of course this line gonna catch up and Bitcoin gonna hover around before completely losing that. So by the time we go to the 200-week, it might be around 60 something K. So 60K is a cycle bottom that I'm eyeing very closely with. Anyway, so that is the quick Bitcoin market update. Let's actually hop on to what Donald Trump did, because he just threatened the world with some tariffs yet again. So Donald Trump has just warned that any country doing business with Iran will face a 25% tariff on all trade with the United States. This is not a threat aimed only at Iran. This is a warning to China, India, Turkey, the UAE, and anyone still buying Iranian oil. And it comes at a moment when Iran itself is under extreme pressure. So what did Donald Trump just announce? Of course, he did that on Truth Social. Donald Trump posted a message saying the decision is final and conclusive. So effective immediately, any country doing business with the Islamic Republic of Iran will pay a tariff of 25% on any and all business being done with the United States. So this order is final and conclusive. No delays, no exceptions, no waivers. If a country keeps trading with Iran, then there is no excuse for the US not to slap out those 25% tariff on everything that country sells to America. That means higher costs for US importers, immediate pressure on foreign governments, and a clear attempt to isolate Iran economically. This is a secondary sanctions, but on a much bigger scale than before. So this move doesn't just hit Iran, it hits Iran's partners. China is the biggest target. China buys most of Iran's oil. India, on the other hand, they trade about $1.7 billion a year with Iran. Turkey, the UAE, and Iraq are also deeply exposed. So Donald Trump, what he's effectively saying is choose between the US market or Iran. And for most countries, the choice is definitely painful. So this tariff threat is not happening in a vacuum. Iran is in the middle of its worst internal crisis in decades. Protests began in late December after the Iranian currency collapse. So here are some footage of what is going on inside the country. So we have the protests going on. Thousands of people and protests broke out in all cities. And if we take a look at the Iran's currency, it actually dropped to zero against the US dollars. And here are some footage of women protesting because they don't want to be under the control of Islam again, and they were taking off their hijabs just to protest against the Islamic regime. And videos like this all over Twitter. And the food prices in Iran, so locally what's going on inside the country, food prices jumped over 60 to 70%. Inflation pushed past 40%, and savings became nearly worthless. What started as economic anger has now turned into something political. So protests are now nationwide. They're entering the third week, and they are calling openly for regime change. Human rights groups reported at least 500 protesters are being killed, and more than 10,000 people are being arrested, and widespread injuries as well. And the government response has been quite brutal. As protests intensify, the regime did something critical. They shut down communication across the country. So internet assets collapsed, phone lines were restricted, international calls were blocked. In some cities, connectivity went nearly to zero. This is a familiar pattern in Iran. So Iran actually used the same tactic back in 2019 and in 2022 as well. And each time it was followed by a mass crackdowns. The goal right now is quite simple. Silence the country before the world can see what happens next. So Donald Trump has not ruled out stronger actions yet. What he said is that the US has very strong options if killings continue. But here's the key point. Most analysts believe a full-scale military intervention is still unlikely. Economic pressure is the main weapon for now. That's why this tariff matters so much. It allows Donald Trump to escalate pressure, to punish Iran's partners and avoid immediate war. Compared to Venezuela, Iran is actually a much harder target. Why is Iran a much harder target, you may ask? Iran is not Venezuela. It is a vast and covered by mountains and very militarily prepared and armed with missiles and drones. It can also disrupt the Strait of Hormuz. So there's a map right here. If you guys didn't know about the strait, so this is one of the most important strait among the whole world because most of the oil supply is going through this strait every single day. So there is a rumor out there, like one of the strategic tactics that Iran can pull is basically shut down the strait, and that will disrupt the entire world of the oil supply. So this is one of the tactics that Iran can pull, and it can hit US base indirectly and trigger even more regional instability. So a quick raid like Venezuela is not completely realistic for Iran's case. That's why sanctions, tariffs, and economic isolation would always come first. But this is a turning point. The US is no longer just sanctioning Iran, it is forcing the world to pick sides. At the same time, Iran is under internal pressure because there are hundreds of videos like this on Twitter. The regime is losing its legitimacy, communications being shut down, and global markets are watching closely. This raised risk across oil market, emerging markets, and geopolitics. And it adds to a growing sense that 2026 is starting in a much more unstable world. We will keep tracking this closely because what happens next won't just affect Iran. It will affect prices, markets, and global power dynamics everywhere. So we will take a short break, and coming back to you, we'll dive into Venezuela and how the market has been doing after the attack or the capture of its president from the United States. So stay with us.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, his family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxum, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Rocksome, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Welcome back, everyone, and thanks for sticking with us. We're now going to dive into what's going on in Venezuela because the stock market absolutely exploded and did the unthinkable. So Venezuela's stock saw 130% to record high as Maduro's captured by the US. So here's is actually not a typo. This is one of the fastest stock market rallies anywhere in the world ever. So the simple question that we are asking here, why is the country that's been economically destroyed for over a decade suddenly booming on the screen? So let's break it down. Venezuela's benchmark, so IBVC, if we actually scroll down to how the stock market is responding. So IBVC tracks the biggest companies listed in Caracas. And here's what we saw. On 3rd of, basically scroll down. So on 3rd of January, so when Maduro was captured by the US, that's when we saw the massive boom. On 5th of January, the index jumped over 16% in one day. By 8th of January, it gained past 100%, and by 13th of January, it was already up more than 130% in dollar terms. So some reports even show brief spikes close to 150%. Banks led the rally, stocks hit daily limits, and trading was even halted at times because prices were moving too fast. This is extreme, even by emerging market standards. So why the market is rallying so hard? This rally is not about today's economy, it's about hope for tomorrow. So investors are betting on sanctions being lifted, foreign money coming back, and oil production being restored and maybe restructured on its debt. Remember, Venezuela holds the largest proven oil reserves in the world. Under Maduro, production collapsed from around 3 million barrels per day to under 1 million. Now, markets are pricing in a future where US oil companies return, infrastructure is rebuilt, and Venezuela re-enters global trade. And this is a regime change trade. So oil, of course, is the heart of this rally. The US has already signaled that American energy companies may get involved. Crude exports could resume quickly and production could climb back toward historical levels. There's even a deal in motion to export up to $2 billion worth of Venezuelan oil. So, question, especially viewers who do not live in Venezuela, you might be wondering, why are local Venezuelan partying? So let's go back to the previous news. There's a picture of local partying and holding a US flag. So why are the locals so happy and celebrating the capture of their very own president? So to understand the move and why locals are happy, you need to take a step back and know the context. So ever since 2013, if we take a look at the GDP of Venezuela, it has been down only, is on a free fall. So Venezuela's economy shrank more than 75% since 2013, and basically ever since Maduro became the president, inflation ran into the millions of percent and currency collapsed. The stock market became tiny, illiquid, and very unstable. That matters because when markets are small, even a little optimism can cause massive moves. And this rally looks huge, partly because the base was broken. And of course, not everyone is celebrating. Analysts are very clear on one thing. This rally is driven by speculation, not so much as fundamentals. So if you guys want to invest into Venezuelan's market, just bear in mind that there are key risks. For example, political uncertainty still very much remains. Power structures are not fully changing. Hyperinflation is still very extreme. So one bad headline could reverse this fast because remember, this is not a normal market after all. And this rally, let's go back to the stock market. So let's go back to the chart. So this rally is not saying Venezuela is fixed. It's saying the worst chapter may be over. The door to recovery is now open and capital always moves fast and people later. This is a reminder of something powerful. Markets don't wait for reality. Markets are forward-looking. They move on expectation. Whether this becomes a real recovery or just a historic trading spike, it depends on what happens next, and we'll be watching every step of it very closely on Roxham TV. Moving on to the next piece of news, we also have a video from Jerome Powell, the chair of Federal Reserve, because he's now facing DOJ subpoenas, and that alone is enough to shake global markets. So on 11th of January, Jerome Powell revealed that the US, so DOJ, issued grand jury subpoenas to the Federal Reserve, and the investigation could lead to criminal charges against him personally. This is unprecedented in modern US history, and a line has just been crossed. Personally, I'm very concerned. The subpoenas focus on Jerome Powell's testimony to Congress in mid-2025. Specifically, it's about Fed's headquarters renovation in DC, Washington, a long-running project costing around $250 million to $300 million. Jerome Powell testified last summer about project costs, about delays and oversight. Now the DOJ is questioning whether that testimony was misleading. Jerome Powell, he didn't stay quiet. He posted this video, which is really rare of him. He called the investigation unprecedented and politically motivated. That language matters. What Jerome Powell is effectively saying is that this is not about the construction costs. It's about monetary policy, and many people across both parties actually agree with him. The Federal Reserve is supposed to be independent. That means no White House pressure, no political threats, and no legal intimidation over interest rates. So any former Fed chairs, any former Treasury secretaries, Republicans or Democrats, all of them came out and said the same thing. This crossed a red line. Once markets believe that Federal Reserve is politicized, trust start to crack. But what Donald Trump claimed is that he doesn't know anything about the investigation. So whether it was indeed Donald Trump's move or not, let's take a step back. So what could be his motive? President Trump has wanted much lower interest rates for years. He has publicly demanded rates to be as low as 1% and faster and deeper cuts. Jerome Powell so far hasn't done that yet. Instead, what he did was rates were cut gradually in 2025. Jerome Powell kept warning about inflation risk, and that made Jerome Powell a problem for Donald Trump's agenda. For now, suddenly, Jerome Powell is under criminal scrutiny. That's why critics call this intimidation, not oversight. And there is perhaps another angle we could look at this news, because timing-wise doesn't matter very much. The 2026 midterms are in November. Historically speaking, the president's party almost always lose seats about 90% of time. So lowering interest rate would essentially boost stocks market, it would lower mortgage costs and improve consumer mood. So in other words, it's helping with the vote. So Donald Trump wants those effects before midterms, not after. Waiting until Jerome Powell's term to end in May 2026, it may be already too late. So that's why the pressure is happening right now. And as for Jerome Powell, no charges being filed. Subpoenas demand documents and testimony could follow. But even without an indictment, the damage is very much already being done. Markets don't price outcomes, they price risk. And this just added a new one. So the final takeaway from my side, this is much bigger than Jerome Powell. This is about whether the Fed stays independent, the dollar stays trusted, and the US institutions remain credible. Once central bank independence is questioned, borrowing costs would rise, currency confidence would weaken, and global volatility would increase. Markets can survive high rates. They can even survive low rates or inflation rate. What they can't survive easily is politicized money. This story is far from over, and every trader, every investor, and every policymaker is watching very closely. We'll keep tracking it over on Roxham TV when we get more updates. So we will take a short break for now. And when we come back, we'll dive into the AI developments because it is happening fast. Stay with us.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the center of the planet moved to Wall Street. Today, we're traveling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxum, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxum, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Welcome back to Roxum TV, and thanks for sticking with us. We're now going to dive into the AI developments, because AI is no longer just answering questions. It's starting to do real work. In just the past few days, we have seen AI coworkers, AI healthcare assistants, AI inside your phone, AI powering robots, and a massive race for computing power. So this is no longer hype anymore. This is AI moving into daily life quietly and quickly. So let's break it down what just happened. So on 12th of January, Anthropic launched Claude Cowork. So think of it as an AI intern that works on your computer by itself. Claude Cowork is built into the Claude desktop app for Mac OS. It's currently available as a research preview of Claude mass users. So here's what makes it different. This is not coding. It is office work. You can tell Claude things like, okay, organize these files, or turn these notes into a report, or maybe track expenses from these screenshots and clean up this folder and summarize everything. Claude would then read files, edit documents, create spreadsheets, or delete or move files around. All you do is describe the task in plain English. Claude would break it down, work on it, and update you in real time. And you can interrupt at any time, just like with a real coworker. And here's the craziest part. Anthropic's own engines, they say, Claude helped build Claude Cowork in just 10 days. People who have tested it say it feels like a $200 a month intern who never sleeps. And that's not even a joke. That's a productivity shift. Anthropic is also moving into healthcare, and the whole AI scene is moving at such a rapid pace because this was just announced one day earlier that they'll be launching Claude for healthcare. This was announced at the JP Morgan Healthcare Conference, and yes, this is serious. What this essentially does, this version of Claude, is designed for medical data and built for patients and providers. So patients can connect health records, upload lab results, link wearable data like Apple Watch, and ask questions in normal language. And doctors and insurers, they can review prior authorizations, process claims, search medical codes, and reduce paperwork. So Anthropic is saying that health data is not used for training, and Claude clearly wants users to consult real doctors. So this is more about efficiency, not so much about diagnose. And not just one AI company that comes in massive announcement. Here comes another massive announcement. So on 12th of January, basically yesterday, Apple and Google announced a multi-year AI partnership. Google's Gemini models are coming to Siri, and this is huge. Apple evaluated multiple AI options, and they happened to choose Gemini. That means smarter Siri, finally, better on-screen awareness, and cross-app intelligence. The rollout is expected later in 2026, so for Google, this is massive. Gemini is now heading toward billions of Apple devices. So Alphabet's market cap surged past $4 trillion after the news. No surprise there. This is a clear win for Google in the AI platform war. And it doesn't just stop there, because in just 1 week, and today is 13th of January, there are multiple AI breakthroughs in the industry already. So at CES 2026, 1X Technologies showed major progress on humanoid robots. So this humanoid robot, his name is Neo. This company is backed by OpenAI, and the approach is quite interesting. Instead of just training robots on language and vision, 1X focus on physical-based world models. So what does that mean? It means teaching robots how the real world actually works and how objects move and how force, balance, and motion behave. Neo is designed for household tasks, so ironing clothes, or maybe putting a toast inside to be toasted, something like that. And right now, they are designed for household tasks and eventually industrial work. The price target for a Neo, so one robot, is around $20,000, and deployments might begin somewhere in 2026. This puts 1X directly against Tesla's Optimus and other humanoid robot startups. So the race is very much heating up. And at the same time, we also have ChatGPT Health. OpenAI just launched ChatGPT Health on 7th of January. Like I told you, there are many updates just in the beginning of 2026. This is a dedicated health tab, so users can connect health records and link wellness apps and analyze wearable data. OpenAI says it can now handle over 230 million health-related questions every single week. They also acquired a health record startup called Torch for $100 million, and more acquisitions are coming. This is a full-on AI health arm race. Finally, let's talk infrastructure. And here we have Meta, because Meta just launched Meta Compute. What Meta is trying to build is tens of gigawatts of AI compute this decade and hundreds of gigawatts long term. That's the power usage of a small country. They are planning new data centers, new supply chains, and even nuclear power deals. This is about one thing: who controls AI capacity at scale. So compute is now the bottleneck. If we put all the news all together, what just happened in the beginning of January, AI is becoming a coworker, is entering in healthcare industry, powering phones, driving robots, triggering a global compute race. So this is no longer about demos. This is infrastructure, labor, healthcare, and daily life. Early 2026 is moving faster than all of 2025 combined, and we are just getting started. So we'll keep breaking it down here on Roxham TV. Moving on to the next interesting update I've seen all over crypto Twitter. Crypto content is being pushed down on X on purpose. So over the past few weeks, many crypto creators have seen their reach collapse. Some say views are down around 70 to 80%, even with the same followers. And now we know why. This isn't a bug, it's an algorithm shift. So here's what people across crypto are reporting. Posts are badly shown up in followers' feeds, engagement suddenly collapse. Even big accounts with 100K or 300K followers are still struggling. That lines up with what X has admitted so far. So X has been rolling out major recommendation changes since late 2025, but they hit crypto hardest in early 2026. The new algorithm now prioritizes long-term posts, articles, links, videos with strong completion rates, and content that drives bookmarks and profile visit. At the same time, it penalized repetitive posts, engagement bait, shilling language, or maybe keyword-heavy crypto posts. So what it includes is something like phrases like to the moon or take a spin like BTC or GM or copy paste market text. In simple terms, classic crypto posting behavior now gets punished the most. So here's the part most people miss. Crypto spend exploded on X. At one point, crypto-related posts surged over 1,000% in a single day. Millions of low-quality bot posts flooded the platform. Many of those bots were paid accounts, so that essentially forced X to act fast. The problem is, real crypto users got caught in the same net. And X openly admit that crypto is being deprioritized, and this is important. X head of product openly stated that crypto posts are far less likely to be recommended. Quoting certain crypto posts can lock your feed into the same content for months, and the system actively avoids amplifying crypto-heavy timelines. This is not speculation. This is an internal design choice. Crypto is being treated as high-risk spam territory. And even big accounts are struggling, and this is where it gets painful. Smaller accounts sometimes would go viral, but established crypto creators are hit hardest. The reason why is because the algorithm would automatically assume that large crypto accounts, they will come with higher probability of shilling. Higher posting frequency would equal to low quality signals, and familiar crypto language like GM, it stands for spam pattern. So instead of rewarding consistencies, the system is now resetting distribution. That's why views can drop 10x overnight. So people are asking right now, is this a shadow ban? Well, technically no. There's no manual ban, no warning, no strike. But functionally speaking, yes, crypto is being buried. Your posts still exist. They are just not being showed. And that's why it feels invisible. And after the backlash exploded, Twitter finally responded. Here's what they promised. They promised they're going to do open source the recommendation code and publish how organic reach works. This is supposed to happen very soon, according to X. So let's be clear about this news. The drop in reach is real. It's backed by platform data, executive statements, and user behavior. X is trying to clean up spam. Crypto got hit hardest in the process. This is a platform reset, not so much a glitch. So for creators, this means less keyword spam, more original thinking, and fewer low-effort posts. Whether that's good or bad, it depends on what kind of crypto content survives next. We'll be watching the algorithm on X very closely because where crypto lives online could shape where attention and capital flow next. So stay with us. Moving on to the last piece of news we have got today. Michael Saylor, Bitcoin treasury company, strategy is not slowing down, not even a little bit. The company just bought another 13,000 BTC, spending around $1.25 billion. That works out to roughly 91.5K dollars per coin. After this purchase, Strategy now holds around 687,000 BTC in total. Altogether, the company has spent around $51.8 billion with an average cost of around $75,000 per BTC. And the key point here is this. Even after building the largest corporate Bitcoin position in history, Michael Saylor is still buying aggressively. Institutional interest is also picking up. One example stands out is SG America's Securities, which manage around $30 billion, boosted its stake in Strategy by 229%. It now owns roughly 728,000 shares, worth around $115 million. That tells us something important. Many institutions would rather get Bitcoin exposure through a stock than holding Bitcoin directly. At the same time, regulation is starting to turn into a tailwind. In South Korea, regulators just entered a 9-year ban on corporate crypto investing. Public companies that can now put up to 5% of shareholder equity into Bitcoin and other crypto assets. So that's a big shift. Europe is moving as well. In the UK, a Bitcoin treasury firm called the Smarter Web Company is planning to list on the London Stock Exchange's main market. That would give investors an easier way to buy into a public company that holds Bitcoin on its balance sheet. So when you step back, the picture is pretty clear. Michael Saylor is not slowing down. Institutions are increasing their exposure and regulators are opening the door. All of that points to one thing. Corporate Bitcoin adoption is accelerating and is happening globally. And this is a trend we'll keep watching very closely on Roxham TV. Anyways, that's pretty much all the updates we have got in today's live show. Last call to action before we end this. Make sure to give us a follow on Twitter or X. So my personal X is gemcrypto_io. Make sure to follow Roxham TV as well, because we have regular updates coming to you every half an hour, not just about Bitcoin, but about global news. So here we have gold and silver leads to the global asset leaderboard, and we cover news all around the world, macroeconomy, and also AI as well. So make sure to give us a follow because there's many valuable content you don't want to miss. So our live show in Hong Kong is going to start from 3 a.m. Eastern Time. If you don't manage to catch our live show basically on time, don't worry about that because the shows are also available on both Roxham TV YouTube channel and on my personal YouTube channel, so General Crypto. Thank you so much, guys, for tuning in, and I'll see you guys in tomorrow's show.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.